Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 78 unit building, 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below. Always consult with a tax advisor, financial planner, and/or attorney before making investment decisions. Having said all that, all you need to do to learn more is go to homeinvest.com or click in the description below.
Welcome back to Purpose Driven Passive Profits, the show where we believe that real estate investing can help you do your godly duty and build a solid foundation. If you are looking for private planes and blingy stuff, this is probably not the real estate show for you. But if you are looking to build generational wealth and to honor God with that, I think you will find this is a great place to be. His name's Nate Armstrong. He is the founder of Home Invest. My name is Steve Warner, and I'm the Chief Investment Officer. Welcome to the show today. We are going to be talking about why you should invest in multifamily during a time of recession. So, Nate, when recession happens, there's a lot of things that go on in the marketplace. Right now, what are people investing in as the Fed pulls money out of the market? Credit gets a little bit tighter. People with money, what are they investing in, and what should they be investing in?
Yeah, so a lot of investors, where they'll head to is treasuries, especially when the Federal Reserve, they've jacked up interest rates so much, and they're looking. There's been cash runs on banks. There's all this craziness happening, and so banks are paying a higher CD rate, certificate of deposit, and the Fed Treasury is also paying a higher rate right now. They're up into between 4% and 6%, depending on how long you're willing to lock up money. So a lot of investors run there. I think part of your assets there is okay, but Steve, like you and I both know, and everyone that's listening, you guys know, what has been the inflation rate over the last year? What were they saying the numbers were? Most people, even with the government's adjusted numbers, know that it's at least 7%. So does it really do good to tie up money that's making 4% or 5% when you're losing at the rate of 7%? You're actually losing negative 2% on your money. And so I think it's okay to have some cash there. It's better than it sitting in a bank account, a savings account. But I think that there's better vehicles out there. And maybe I'm biased. I am, because I love real estate so much. But having a nice multifamily asset that's producing income every single month, that's also going up in a time of recession, that just makes more mathematical sense to me.
So let's talk about that second part a little bit, because I agree. I think that real estate is always going to outperform the stock market, outperform treasury, outperform bonds. But the people who are like, well, I want something that is rock solid safe, right? That's why they're going to treasuries or why they're going to CDs. Can you talk about multifamily specifically? We're going to talk about down the road in another show. We're going to talk about different real estate ventures that you can invest in. But right now, let's just talk about multifamily. Why is multifamily rock solid during a recession? Most people think like housing values go down. If I put money in that, it's actually like I'm going to lose money. Why is multifamily the opposite of that?
Yeah. So a little bit more than a decade ago, 14 years ago, roughly, I had this really wealthy guy come to me. This is right during the last recession cycle. And he came to me and he said, hey, I'd like to invest a bunch of money, but my tax situation is complicated. Can you meet with my people? And if we can work something out, we can do deals together. And so I went and met with his people. It was his attorney, his CPA primarily, then a few other people in the room. And his CPA mapped out this whole structure for me on how investments had to be made. And he was explaining why multifamily was the best, but he would even take single family rentals, but multifamily was the best. And there were 4 things that he wrote on the sheet of paper while we sat together. And the first and last one are probably the ones that are the most important. I'm going to talk about for a second now. The first one is that on a multifamily property, you have something that's called a secret savings account. Every single month, the tenants all pay their rent. That rent goes into the bank and it pays down something that's known as principal. When that principal is paid down, that's because there's 2 parts to a loan. There's principal and interest. When that principal is paid down, it actually lowers the balance of the loan. Okay. Where that comes into play is for the other thing that he wrote down called appreciation. Okay. Appreciation most people think of appreciation as the market goes up magically. Everybody around you's value goes up. In recessions, single family doesn't always go up. Gold doesn't always go up. But multifamily real estate, on the other hand, usually does go up. And here's why. The value of a multifamily property is driven by the net operating income. So really, really simple. If we increase the income on that property or we decrease the expenses, whatever results in higher net income, we actually increase the value of the property. And Steve, what happens when everybody else is losing their house in the single family world? What happens to rents on multifamily?
They go up because people need somewhere to live. And it's not just that people are losing their houses. People are, they need to move. They need to reduce costs. So they might sell their house. They might rent their house. They might do something, but they need to lower their living expense, which leads to them renting, right? They're moving from $4,000 or $5,000 a month house payment to $2,000 a month rental. Am I understanding that correctly?
You absolutely nailed it. So rents will go up on these multifamily properties because everyone is trying to reduce. So they move into these multifamily buildings. And so when I sat down with this wealthy guy, his CPA and his attorney, they were mapping this out for me. And then they also showed me some really cool tax strategies that wrap into this. So multifamily is the best asset class during recessions by far.
Awesome. Nate, are there some other benefits, like hidden benefits to real estate investing over stock market, treasuries, bonds that people should know about?
Yeah, accelerated depreciation, taking repair credits. You can't, outside of maybe investing in an oil well, the government doesn't have a lot of incentives for investing in the stock market. They don't have a lot of incentives for investing in bonds. But with real estate and with oil wells, the government tax code, IRS tax code, it's been designed to incentivize people to invest into it. Why would the IRS do that? Well, if we think of the IRS tax codes not as in my mind, I used to think penalties, but it's actually the opposite. The IRS tax code is actually incentives trying to incentivize certain behaviors. And so they've got these massive incentives on taxes because they want you to invest in real estate. So you create jobs. So you spend money at Home Depot so that you fuel the economy. And so what are those two big incentives? Well, number one is called accelerated depreciation. And number two is repair credits. Instead of replacing things, you can repair things and you get these massive tax deductions just for owning the real estate. And not only do they benefit the investment itself, but they also can carry over into your personal taxes. So if you would have owed a big tax bill for something else, you might be able to offset that tax bill or even wipe out that tax bill through your real estate investments.
Awesome. So Nate, if people are interested in investing right now, we have a current offering. Do you want to talk about that just a little bit?
Yeah, I'll just give a little preview on this one. So it's this beautiful 22 unit building. It's in the historic district, beautiful, beautiful area, awesome tenants. And the best part is, Steve, is that we locked into a 4.33% interest rate loan. While the rest of the market out there is paying 7% or 6.5%, we locked in at 4.33%. The bank loves this deal. We love this deal. And it's not some teaser rate loan. It's an actual legit long-term fixed financing rate. So we're really, really excited about this deal. It's not very big though. It's only a 22 unit building. We've already got some soft commitments, verbal commitments, and we haven't even published it yet. So it's going to fill up really, really fast. If you're listening to this and you're like, hey, I'd like to inquire more about that deal, then head over to homeinvest.com and click on the book a call button, jump on the line with us, and we're happy to talk to you about it. If you miss this one because it's going to go pretty fast, then maybe ask us about other ones that we're working on too.
Awesome. So that is homeinvest.com. You can go there. We have all the details there for you. You can also book a call. There's also a link down below this or in the show notes if you're listening to this on a podcast where you can book a call directly with us as well. Till next time, remember to be looking for good investments that form a solid foundation for your financial future. We'll see you soon. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Oh, so I'm excited to announce this. We've got a 78 unit building, multifamily property. It's 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below.